This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell by more than 1% on Friday and cemented weekly losses as analysts projected a supply surplus next year on weak demand despite an OPEC Plus decision to delay output hikes and extend deep production cuts to the end of 2026. Brent crude futures settled at $71.12 a barrel, shedding 97 cents, or 1.4%. U.S. West Texas Intermediate crude futures settled at $67.20 a barrel, falling $1.10, or 1.6%. For the week, Brent prices lost more than 2.5%, while WTI saw a drop of 1.2%. A rising number of oil and gas rigs deployed in the United States this week, pointing to rising production from the world's biggest crude producer, also pushed prices lower.
Europe's struggling industries are bracing for a new gas price shock over the coming winter months, as colder weather depletes stocks, competition with Asia for liquefied natural gas intensifies, and the prospect of reduced Russian supplies looms. Since the energy crisis of 2022, when gas prices peaked at nearly €350 per megawatt-hour, MWH, dozens of firms across Europe have closed factories and cut activity and jobs as high gas prices undermine their competitiveness. Many are maintaining reduced demand and lower manufacturing activity, with negative implications for Europe's sluggish growth.
Moving on to the top news in the energy sector.
Russian oil supplies to the Czech Republic via the Druzhba pipeline resumed on Friday, Czech refiner Oil and Unipetrol's CEO Marius WNUK said. The supplies have been restored this morning and crude oil from the Druzhba pipeline is flowing into the Czech Republic normally, WNUK said. The country saw a halt to supplies on the route earlier this week. Sources told Reuters on Thursday the flows would resume on Friday after payment issues linked to the transit via Ukraine, which caused the halt, had been sorted.
Diesel shipments from the U.S. Gulf Coast to Europe's main trading and refining hub, the Amsterdam-Rotterdam-Antwerp (ARA) region, are set to rise owing to improving export margins on the back of scarce supply in Europe and rising U.S. refinery production, according to traders and ship tracking data. Europe is seeking higher transatlantic diesel imports, as weaker export margins for shipments from east of Suez slowed flows on that route in the last 2 months. Rising European gasoil demand also prompted higher transatlantic imports. Independently held gasoil stocks in ARA fell for the third consecutive week on Thursday to 2.13 million tons, according to consultancy Insights Global. Next, we have the top news in metal markets. China's trade restrictions on strategic minerals are starting to hit Western companies where it hurts. Blaming Beijing's curbs on antimony exports announced in August, German chemicals and consumer goods heavyweight Henkel told customers last month it had declared force majeure and suspended deliveries of 4 types of adhesives and lubricants widely used by automakers, according to a November 8 letter to clients reviewed by Reuters. Henkel uses the silvery metal to make its Bonderite and Terrason branded products, core parts of the company's Adhesive Technologies division, which brought in €10.79 billion, $11.4 billion, in revenue last year.
Gold prices inched up on Friday after the November U.S. job growth report suggested the labor market continues to ease gradually, leaving room for the Federal Reserve to cut interest rates again. Spot gold gained 0.2% to $2,636.31 per ounce by 1:41 p.m. Eastern Time, 18:41 GMT. U.S. gold futures settled 0.4% higher at $2,659.60. U.S. job growth surged in November, but this probably does not signal a material shift in labor market conditions that continue to ease steadily and allows the Fed to cut interest rates again this month.
We will now look at the top news in the agricultural sector.
Russia, the world's largest wheat exporter, will raise its wheat export duty by almost 32%, the government said on Friday, as the country seeks to curb exports in the face of high inflation and potential supply crunch due to the poor state of winter crops. The duty has been climbing since mid-August from a level as low as 257 rubles, $2.60, to 4,871.5 rubles per ton, but so far has failed to hinder exports, which have been proceeding at a near-record pace in recent months. The duty hike also comes as leaked data from the state weather forecasting agencies showed that over 37% of winter crops are in poor condition or have not sprouted due to a low level of moisture in the ground.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.